Vikas Khemani, founder Carnelian Capital Advisors, now joins in. Vikas, good to have you on board. And it has certainly been an interesting year. In these pandemic times, the leadership has definitely been within the IT sphere. There's been very strong deal momentum that we've seen for key large deal wins since the month of July, primarily with the large caps like Infosys, TCS, as well as Wipro. How are you reading into this momentum?
So I think, it's pretty much similar to, the conversation we have had a couple of months ago, about 3 months ago, I remember. I think there's a strong tailwind for IT sector, which has kind of significantly changed post-pandemic. Every company, in the world, whether you are in IT, financial services or chemical or any other industry, across industries, across the world, companies are trying to figure out how to sort of conduct business in a new normal. And that has kind of accelerated to create a demand for digital migration, cloud migration, and hell lot of technologies, right? So need for technology has gone up multifold. And we have a sector which is basically, catered by and large by the Indian companies, specifically in IT services. So this is one sector where Indian companies have almost no global competition. Pretty much, delivery happens from India. And within that also you have only limited, 10, 15 meaningful companies who could cater to this demand. So the way I see is that the demand environment is going to remain very robust. At the same time, I think, that would lead to the competitive intensity is very low. So whenever demand environment is robust, competitive intensity is very low, you have better margin and better returns. And moreover, this sector does not need a lot of capital to be deployed. So this is a very interesting setup for any industry to deliver returns, because low capital requirement, no capital requirement, you are churning out cash every year after year, and you are growing very well. So I see over the next 3-4 years, this environment is going to remain like this, and more people sort of get convinced about it, which happens typically. It's a process quarter after quarter. As companies deliver, as companies get more orders, you see sector getting re-rated, because there is a very little. This sector does not need to raise capital. In fact, it throws out capital. So you have to buy within the same amount of stock available. So this process, according to me, would lead to a significant re-rating of the sector. So over the next 3 to 4 years, I see IT sector remaining one of the star performer for the Indian capital markets. I mean, that's how we are reading, and I see pretty much very little risk to this hypothesis at this point in time.
Very optimistic, Vikas. And do you also agree that while this deal momentum has been very strong, the size of the deals will now only incrementally become larger? And which sectors or which verticals is it that you're seeing most of the deal wins coming in?
Again, like point I made, that the need for technology is pretty much across the board. If you see, if you go to a financial services company, they are trying to reorient in the way of to do business in new normal. If you go to a manufacturing company, they are spending in a different way. How do you automate more? How do you make it more, future focused? So the interesting part about this wave is that the need for IT spend is pretty much across the sector. Of course, large sectors like financial services, large sector like manufacturing. Even within the technology space, I think companies are going to spend more money. So I think you will see pretty much very across the board spending happening. And in this process, all the large companies also will benefit, and mid-sized companies also will benefit, because the large companies may not be able to cater to mid companies' demand specific requirement. So they would focus probably on the larger deal wins. And in this process, we will see some smaller mid-sized companies also becoming large or grow very well over the next 3-5 years. So we will see smaller companies becoming bigger. Bigger companies will definitely, sort of continue to grow in double-digit growth. So this is a very interesting, phase of growth we are in. And, you will continue to see the deal win momentum getting bigger and bigger with the, every quarter sort of passing. And in fact, at some point in time, I believe that, Indian companies will struggle to keep the pace with the growth. I mean, that's the kind of at least momentum we are sensing based on the interaction with the various participants. And this will in fact be very good for some smaller companies who can capture this lot of demand lying around and go and capture. So I feel this is the kind of environment we are right now.
TCS has said that double-digit growth is going to be a reality and achievable for the IT industry. Accenture pretty much in their earnings this time around reinforced the same opinion. Do you see double-digit a reality for the IT industry for the next 2 years?
When such a large, credible players are saying, I think their opinion being in the industry matters much more than mine. But having said that, I probably, see no reason why this will not be achieved. Please let's understand that what pandemic has done. See, this transition or migration was anyway happening in the technology space from digital cloud migration. But the pandemic has brought what would have happened over next 10 years to next 4 or 5 years. And this has suddenly sort of created a big demand, and hence you will see, I am not even saying next 2 years, I would probably say next 4 or 5 years, you will see a very robust demand environment for IT services. And hence I strongly believe that a very large part of the portfolio should be dedicated to IT services, because in this sector the risk rewards are fairly good, free cash flow, you don't have capital requirement, and the shocks to the downside remains pretty limited. So you will have a low volatility and a very decent return. So it's more like a consumer kind of sector at this point in time. And we are playing this through significant overweight. And I see double-digit environment pretty much reality as we see over the next 3, 4, 5 years.
It has only accelerated the adoption of digital transformation and cloud migration. Do you see cloud becoming a key growth component and driver going forward for the Indian IT industry?
It is, and it is one of, if you hear the commentary of the most of the companies, like see, if you see a lot of, so companies have been working or getting contracts or deals for cloud migration. So if you look at the companies like Microsoft, they have their own products where they sell the product, but the adoption or implementation has to be done by the IT services company in India. So in fact, a lot of growth from IT services is very much aligned to how much cloud capacity is being sold by the Amazons and the Microsofts under their respective products. And as they do grow, and if you see their number, they've been growing at 30-35% over the last a couple of years, and more so in this pandemic. So if they are growing at 35%, the cloud migration or adoption or implementation is done by the Indian IT services company. So if they are growing, they are the lead indicator. Of course, Indian IT services company will have to implement that, and their growth will be very much linked to that. So cloud migration is a real big theme, and you will see a massive tailwind on this over next many years. Every company worth whether it is large, mid, or small, will be sort of or is being forced to look at cloud solutions because of not only cost savings but also a lot of other added benefit in terms of getting better customer experience and so on and so forth. So this is the trend which is here to stay, and hence I believe that the risks to our hypothesis is pretty low.
Vikas, the new COVID strain, possibly extended work from home, risk of a second wave again. I lost count of the number of waves here, but we are anticipating some amount of turbulence on that, especially in the UK at the moment. Implications of this for the IT industry?
So I think again, when I'm making this point, the environment looks very good, does not mean that everything will be very easy, hunky-dory, and things are fine. There will be challenges along the way. There will be corrections. There will be some sort of these kind of developments would happen. But this is the trend which cannot be stopped. This is the trend which cannot be sort of by any reason it cannot be sort of reversed. It might slow down for some reason or other. Let's say for some reason the second phase of lockdown does not mean that we are going to go back to the March situation all over again. Most of us now know how to operate within a sort of lockdown situation. So in fact, that can only accelerate the IT spend trend. So I don't see any such, if any such news comes, and because of that there is a correction in the IT services sort of stock, which happened recently, a couple of days ago. One should use that as an opportunity rather than getting worried about it, because I see no reason why this tailwind or demand environment sort of can get reversed. Well,
on valuations as well, we've seen several of these stocks on fresh highs, large mid caps, both. Are all the positives then priced in? Are we looking at a further re-rating going forward? I mean, they continue to surprise us on the upside, so one can't help but wonder.
So let me make you another very bold statement. I think I remember having a chat with Nipun a couple of months ago, and that time again I said that you will see not only demand growing, earnings growing, but you will see a significant re-rating happening in the IT services stock. I do see over next 2-3 years, most IT services companies will trade in the range of 35 to 40 P. For the simple reason, again, it's a very simple, commonsensical reason. These companies don't need to raise capital. Okay, they in fact throw out capital, so they do buybacks. So the floating stock available for these companies actually is very limited. In fact, it gets reducing. On the top of it, you are having an environment which is growing into, so profits are very robust and they're growing, they're throwing cash flows. So more and more people will get convinced, and more people will have to buy from the very limited stock available from the IT services company. This will lead to re-rating. It's a very simple process. Whenever there is a sector with limited capital requirement and a strong demand outlook or profitability growth outlook, does well over a period of 3-4 years, re-rating is given. I mean, there's no doubt in my mind. So hence, whatever process, this is just a process of getting re-rated. And you will see over next 3-4 years, this getting further accelerated. Just think about what happened from last quarter to this quarter. IT stocks are almost 20-25%, but the earnings have not grown by 20-25%. In this period, more people have got convinced, and hence the valuation has expanded. Same thing will happen next quarter. Same thing will happen 2-3-4 quarters down. More people get convinced, more people will buy. And this is the natural process of any sector getting re-rated. So it is, to me, it's very natural course, and this will further keep happening. So one should not worry about valuation at this point in time. In fact, we are far away from being expensive. We are very, IT services stocks are reasonably priced. In fact, they are, if you compare this with a consumer stock, which is, and today, they also grow pretty much similar, 10-11% volume growth. Why they should trade at 70-80 times P? So if you do on a relative basis, also they are not sort of expensive. So I see pretty much same sort of process getting repeated. What happened to the consumer stock between 2009 to 14? Similar kind of re-rating and growth combination playing out over next 3-4 years.
All right, Vikas, thank you so much for joining us. Great speaking with you in detail about some of the trends in the space, and really a space that everyone's eyeing right now. Okay, we're going to take a quick break, back with some chart busters on the other side.